Welcome everybody to Fides Wealth Strategies Group Financial Moment, hosted by Dr. Chris Rand.
And Mr. Markello.
There we go. And today we're going to talk about the great topic of life insurance and disability insurance. Also, one of the main staples of financial planning. So we do need to have these conversations.
It's in the protection planning area, right?
It is in the protection planning area. So we do want to spend some time talking about life insurance. Life insurance is one of those topics that I think it's a hot topic in the financial planning community. There's a lot of different trains of thought, how to buy life insurance, what kind of life insurance to purchase.
How much?
How much? Yeah, exactly.
I think they should call it death insurance at the end of the day,
Yeah, it's
right?
really, there's not life involved, right? Yeah, there really isn't. It's really, and it doesn't pay well.
Although if you think about it, Mark, life insurance is one of the products that you and the insurance company sit on the same side of the table.
Yeah.
Right?
Yeah.
You don't want to die.
Yeah.
They don't want you to die.
No.
So, that's a good thing.
They just want you to die. They want you to die after you are
Stop
no
paying
longer,
your premiums?
Yeah, after you stop paying the premiums. That's the only differentiating factor there.
That's fair.
So let's talk about really the two extremes, right? We have term insurance and we have permanent insurance.
Right. And I like to call them temporary and permanent insurance, right?
Perfect. Now, when do you think is a great application for a term insurance policy?
When you have a temporary need.
Prime example?
That's why I call it temporary insurance.
I like that.
We don't like to refer to our children as liabilities, but they are a financial liability until they get to the point, assuming they don't have special needs, that they're out on their own financially.
That's a great way to bring that in.
Sometimes they boomerang back once or twice, but sooner or later that need won't be there. And so maybe your child is 10, and you presume that the need will be away at 20. I don't know, 20, hopefully 25 probably. To be safe. And so that need is a declining need over 15 years. It's the highest today, and then the need is declining because they're getting closer to the end of the need, and hopefully you're saving assets on the side, so that need is something that can be offset by the assets that you saved.
Yeah, I always like to look at, a prime example is, you get into a situation like you were discussing, a 10-year-old. Realistically, you want to make certain at least they can be out on their own at 20. So you have a 10-year need, a perfect situation to use a 10-year term insurance policy.
Yeah.
Now, the caveat being that in the event that person becomes a longer-term liability, i.e., for me, with my special needs daughter, that's a longer-term liability. We didn't know that initially. A lot of term insurance policies have what's called a conversion option that will allow you to move over into a permanent policy, because now you're turning from a temporary need to a long-term need. And so that's an important thing to look at when you're looking at your term insurance. Sometimes maybe the cheapest term insurance isn't exactly the right thing. We all start our insurance endeavors with the best intentions possible, but sometimes life throws you a curveball and you got to be able to adjust the best way you can.
It does. Or let's take that scenario, Mark, and say maybe at 5 years old you knew that you had a special needs child and that the need would be there forever. It's a permanent need, and you go to buy life insurance at when they're 10, just hypothetically in this scenario, the need is permanent. So you probably want to buy permanent insurance for their need.
Now, there's a lot of different permanent insurances out there. You've got whole life. You've got, which is just as it sounds, it's for your whole life. You have universal life, which doesn't sound like whole life, but it is there and it's designed to be there your entire life. And then you have variable universal life insurance.
Or variable whole life. So variable, I would call it variable life.
There it is. So you have those out there as well. Now, each have their own components and how they're applied. And that's really when you need to get with a trained insurance specialist to be able to figure out what the best option is for you along those lines. A lot of times I hear the argument, do you want to rent your insurance or own your insurance? What are your thoughts on that conversation, Chris?
I don't think it applies personally. The need, and this gets into financial planners' opinions within the industry. There are some that feel very strongly that permanent insurance is needed all the time. There's some that feel it's only needed when tied to a need. Mark and I and the rest of us at Fides Wealth, that's of our belief. And so permanent policies are also called cash value insurance, and I say that because they have a cash value associated with them.
Which is nice
that term policy that Mark was describing earlier, at the end of the 10 years, you're done. There's no cash value back. I've had people say, well, what do I get out of this? I'm like, it's no different than your homeowner's policy or auto policy. You don't ask your auto policy carrier to give you money back at the end. You only use it if you have the event to make a claim. Cash value insurance, on the other end, is building cash value all along that can be used for a number of different purposes, but the main reason for cash value is to make sure that the policy can last for your entire lifetime, right?
Exactly. Yeah.
To age 100
There's a
or
100%
120
chance you'll
or,
use it.
there's a 100% chance that it'll be used as long as it's still in force.
There's only a 2% chance or less than 2% chance on term insurance. I always thought that was interesting.
As far as the payout,
Yeah, the payout.
likelihood of payout. Yeah, not very many term policies into the claim, but that makes sense because term policies are temporary, and not that many people die earlier on. It happens.
Yeah.
That's why houses burn down. People
happen.
are in car accidents. That's why we have insurance. We're insuring for that unlikely event, if you will.
Yeah, absolutely. I think that's a big one. Well, let's talk a little bit about disability income insurance.
Okay.
Disability income insurance is one of those things that it's pretty expensive, but it's because it's probably because it's used a lot.
Well, I think the odds are that you're more likely to use disability insurance and life insurance while you're working anyway, under the age of 65. And when you say it's expensive, I would say that private purchase insurance from buying on your own or individual is can be pricey, but it can be really cost effective when you buy it through a group or through your employer, which falls into that group category. And so that's one of the type of insurance policies that you want to really look around and shop around and find not just the most cost effective policy. Insurance, in our opinion anyway, shouldn't just be shopped on price. There's a lot of things to look at. With disability insurance specifically, the definition of insurance is probably one of the most important things, especially for someone who is educated or has skills.
Correct. Yeah. Own occupation versus ENIAC. Those are big determining factors on your eligibility for getting benefits.
Yeah. Why don't you describe the difference between the two?
When we get into own occupation, it means that you get disabled to the point to where you cannot perform your own occupation. That triggers different than if you have any occupation rider, which means that you don't have the ability to do any occupation. So you can see how big of a term differential that is. So if you were a surgeon and you got disabled and you hurt your hand, if it's your left hand, well, you can still flip fries with your right hand. Therefore, you would not be eligible for your own benefits.
Under any occupation, but under a own occupation definition, that may be the case, right?
That would be your case, absolutely.
And we like to use that example of a surgeon because that surgeon could probably maybe be a general practitioner still now, but that pays a lot less.
Yeah.
They have a lot more in student loan debt,
dramatic for effect,
and experience and things along those lines. But and that's what it really comes down to. And with group policies, you want to ensure that the definition of disability is something that lines up with what you're comfortable with.
Yeah, no, that's a stay. One of the big things I always like to really reinforce with folks, every couple of years, it's important to double check your beneficiary designation on your insurance policies, right? I mean, life happens, divorces happen, deaths happen. It's important that whoever you have set up as your beneficiary, you want to confirm that in fact is who you want it to be.
You really don't want your new wife to find out when you pass away that your old wife was still listed as beneficiary in the life insurance policy.
It's funny you say wife because at the end of the day, it's always the men that mess that up. The wives immediately change who the beneficiaries are when they get married or remarried. But the husbands, we tend to kind of be a little bit more lackadaisical.
I just think they're a little bit more detailed sometimes on that stuff.
That might be. Well, I think that's it for today on Life Insurance Talk and Disability Talk. Thank you again for joining us, catching up on the Fides Wealth Strategies Financial Moment. We'll see you again soon.